Hello and welcome back to the latest edition of the Cybrgen Compliance Talks podcast, where we bring together leaders who are at the intersection of compliance, technology, and business transformation. Today, I'm joined by Jim Bridges, who leads risk and compliance at one of the UK's most dynamic real estate firms, spanning everything from £300 million commercial developments to residential auctions. Jim's also the firm's data privacy officer and money laundering reporting officer. So quite literally sees every angle of risk across the 12 business lines. So Jim, great to have you joining us on the show today.
Thank you. Thanks for having me.
No, my pleasure. And there's a lot for us to cover off. Obviously, I tried to give a little bit of context and a bit of background, but it would be great to hand over to you and, get some more about your kind of background and then lead us up to what you're doing at Allsop today, please.
Yeah, certainly. So I suppose I have an unconventional route into risk and compliance. I was in the army for a very long time, and I left the military after the normal period across Iraq and Afghanistan, and entered the commercial sector via a short stop at the RMLI down in Poole, and then I joined Leading International Bank, where I went into the world of anti-financial crime, predominantly, but latterly in risk and compliance, finishing up as the head of financial crime in one of the Middle Eastern countries for that bank. I left there, had a year working on a crypto wallet, setting up some fraud and compliance services before springboarding out there into Allsop, where I am now the head of risk and compliance. So, as you said, all things risk and compliance, data, financial crime, regulatory, reputational, all of those sort of risk spheres. And we are multidisciplinary business. We do big stuff. We do small stuff. We do international. We deal with international clients and customers. But we're predominantly, it's UK real estate where we're dealing. I think worth just highlighting that we are a regulated business, so we're regulated by the RICS, the Royal Institute of Chartered Surveyors, and then we're also supervised for money laundering, like many other professional services firms are, by HMRC. So we have sort of regulatory lens on us as much as the commercial aspects for a partner-owned firm.
So a lot more kind of regulation than you would traditionally kind of expect.
Yeah, it was interesting to sort of discover that when I moved into real estate out of banking. The real estate agency work is regulated. It's regulated for money laundering, and as a member of the RICS, there's obviously the professional standards that you follow. So we don't have a high street presence, so you won't find us with an estate agents, in a high street somewhere. So we're a much more people-focused sort of relationship business. But all of that does require, keeping good records, knowing our clients, making sure that our data quality is good, and really, vouching safe where we do hold personal and private information and data, that is being looked after under UK GDPR as well. So yeah, it's a full suite. And in a relatively small firm, having come from large corporates, we don't have departments to do each of these functions. So very much it is it's coming together of individual experts, and where you need to, getting external counsel to provide you kind of legal advice and guidance as you go along the way, but managed in-house with a small sort of expert team that tries to keep up with what's going on in the big wide world.
So I'm sure the risk profiles are probably very different between these sort of two groups. So how, as the head of risk and compliance, do you sort of oversee those both and balance them both, ensuring that neither of those kind of plates gets dropped, but you don't get too kind of sucked into one?
Yeah. So I think this is about really understanding the business. So understanding what each business line does, the types of transactions that they deal with, the types of clients that they have, and the background and basis of those clients. You might be familiar with the way that the money laundering regulations work, and we talk about high risk third countries. So there's some countries that are on the Financial Action Task Force list, which if your client is resident or money is coming from one of those countries, then that becomes high risk. So you have to take a more in-depth approach and enhanced due diligence to understanding your client, understanding the source of funds, understanding who the beneficial ownership and those sorts of things. So, and moving from large commercial deals, where that can be incredibly complicated. The entity and the individuals that you're dealing with are but one part of a small network of companies and ultimate parents and ultimate beneficial owners. So reconciling who ultimately benefits from an acquisition or sale is equally as important as who benefits from an acquisition or sale through our auction route, a residential auction, selling a house in the street in that sort of normal way. Who's selling it and who benefits from the sale? Who's buying it, and does the transaction make sense? So being able to scale your tools and scale the team to have those knowledge, skills, and experience to deal with incredibly demanding, complicated, overseas corporate type entities, to dealing with that much more personal aspect of an individual that's buying their first home through auction.
And I'm interested because obviously your world is risk and compliance, but I always like kind of stepping back and understanding within the context of the larger business. So many of the guests we've had on previously who've come from maybe SaaS-based businesses, fintechs, prop techs, ed techs, whatever. They're growing very quickly. They're raising money, and I think amongst the many other things you're kind of juggling on a day-to-day basis, trying to position yourself as a business enabler within the organization and not the person that slams on the brakes, I think is such a delicate balancing act for heads of risk and compliance and people in your sort of position. So talk to me around how you kind of enable that and manage that in the business.
Yeah, it's a really good question, and very different in a relatively small partner-owned firm compared to a large corporate. I think there are two aspects. The first one is building those trusted relationships. So when it does come to having a difficult conversation about a potential transaction because there's some negative news or there's a red flag that we need to kind of review and alert the business to, being able to have an open and honest conversation, not just about the factual, very binary, yes, we can act or no, we can't, there's a financial crime risk or, some such, but helping the business to understand the reputational risks as well. So we may, from a legal standpoint and a policy standpoint, be able to act and, get comfortable, but we're a 120-year-old business this year, that it doesn't take much to quickly lose your reputation. And obviously fee earners are seeking to generate fees. And so and sometimes, this term is used widely, which is the DPO, the Deal Prevention Officer. But actually it's not about preventing the deal, it's preventing the harm that may arise from doing that deal. And I think as long as we, go into that eyes wide open, then that's good. The second aspect is really about setting up, a simple framework that enables everyone to understand who they're dealing with and what the risks are. So this goes beyond sort of the policy point, and regulatory review will focus on training and policy. Do you have a policy in place? Has it been reviewed every year? Is it up to date compared to the regulations and law? Is everyone trained on that? Can you demonstrate? Well, that's just kind of part of the problem. That's demonstrating that you've taken those reasonable steps. Actually, the real embedding comes with the organizational culture. So once people understand what they need to do, that's only part of it. It's kind of the why you're doing it. So thinking about linking back to things like the societal harms of financial crime, thinking about the societal harms of the predicate offences that underpin financial crime, like modern slavery, fraud, these sorts of things that quickly get lost in what can be quite a bland piece of policy or a piece of training. So, we take great care in making sure that our partners and staff really understand why we're doing this as much as what we need to do.
I think it's so interesting. I'm not sure if you're a fan or if you can listen to any of Simon Sinek's work, or if you have done in the past, but I know one of the things that kind of made him famous was that golden circle rule. And I love the kind of example of, start with why, like Leaders Start With Why, I think was one of his books I read as well. And it's amazing how you can get people kind of clubbing together when they actually understand why. Whereas typically a lot of people start with what, it's mandates, it's you must do this, you mustn't do that. And then by the time you're getting to the why, which might be a killer why, you've lost your
You've lost
audience.
them.
Whereas if
Yeah.
you start with why and then build out, it's a much more effective strategy. So I'm glad, you kind of touched on that. I think it's such an interesting thing that a lot of people overlook. They're not psychologists day to day, but understanding that is so important, I think, for affecting behavior change.
Yeah, absolutely. And I think that, in risk and compliance, particularly, that can get lost. It can become a bit of a box ticking exercise, you know, and when your metrics are simply how many people have completed mandatory training this month, how many unusual activity reports have we had raised compared to the number of clients onboarded, they're very sort of binary. They can give you an indicator, but what they don't really do is help you understand the underlying culture, the underlying behaviours that are creating that situation. Um, and it makes me reflect back to my time in the military, because in the military you only have a very short period of time to build that empathy and rapport. That's whether you're posted in as a new troop commander, fresh from Sandhurst. You're given your first troop. You've got 30 boys and girls. You're sort of managing them, developing them, pastoral care, but without building those relationships really, really quickly, empathy and rapport, none of that really happens. So I think it's you land in a new organization, you have to build empathy and rapport, which ultimately builds trust, which makes you, much more open, and kind of those relationships create those two-way conversations. People will come to you with difficult things rather than shying away or hiding them. Yeah, it's hugely important.
Well, I think that kind of segues us on nicely to cybersecurity, because you spoke about data, and through all the kind of the cybersecurity conferences I've been to, all the kind of workshops, it's always bringing people back to the human is the weakest link. That although the cybersecurity industry is a multi-trillion-dollar, pound, whatever industry, if the humans are not enabled to actually do the right things, they are your biggest risk. So getting everyone on board is so important. Now, coming on to that data side of things, because you talked about obviously being a regulated business, what are the biggest kind of regulatory changes you've noticed as it kind of pertains to your responsibilities and how you sort of need to act as a business?
So the big change, and the big change that I've seen across my last 10 years in kind of risk and compliance, is this move from, very much list-based supervision to data-led supervision. So regulators will now routinely turn up and ask for access to your data, not access to a spreadsheet that lists, the transactions you've done for a sample test. And to really underpin that, you've got to make sure that your systems, controls, and processes are all really, really good and clear. But underlying all of that is really good data quality, because it's rubbish in, rubbish out. And two aspects. The first one is that be able to understand your business from its data. So understand where those risks are, be able to pick up from your business information, management information, where those signals maybe indicate that something is wrong, but also really getting to the core of enabling yourself to exploit that data as well. I think from a cyber security perspective, it's all about, right, we've got to keep it in a really secure locker. We need to prevent anyone from outside coming in. That, is hugely important. So those sort of controls around preventing that data compromise is really important. But then back to your point about the people. So data leakage is obviously a really big and concerning issue, but is very, very simple. If someone makes a mistake, sends the wrong file to the wrong person, fails to encrypt or password protect some sensitive information, might be commercially sensitive, might be personal data or information, that gets sent to the wrong place. And then the final one is the insider. So, where you have an insider threat, where an individual that for any number of reasons, may decide to do something bad. They're disgruntled employee. They're in the process of, a consultation or potential redundancy. They package up a bunch of data and they email it home to themselves so that they've got that when they go. Or they're disgruntled. They know that something, or they believe that something bad has happened, and they kind of fire it out to the newspapers and that sort of thing. So the people aspect, coming directly back to empathy, rapport, and trust, means that, we don't have to resort to things like whistleblowing lines, because actually you've got an open and transparent culture in an organization where everyone is talking about the things that matter, talking about the things that matter to them. So, personally, they feel safe in this work environment. They're less of an insider threat. And that kind of all comes together in this holistic set of protections, ultimately, that is enabled by people. As much as someone recognizing a phishing email, it's all part of the same, general understanding, being part of this, I suppose, this kind of corporate organism, if you like, and having that social contract as much as your work contract.
A trend that I've been kind of like hearing quite a lot recently is around AI and shadow AI, of, businesses that might not have a strategy around AI adoption, yet the employees are feeling the need to adopt AI in order to get ahead, stay ahead. So they're maybe signing up for the free versions. They don't have the same sort of security in place. So I don't know if we can kind of talk around that for a while. I don't know how and where you're kind of using it also, whether AI is part of your initiative, but yeah, any kind of exposure or experiences you've had on that side of things.
Yeah. I mean, it's really pertinent. So actually the RICS on Monday, their use of AI in surveying practice professional standard goes live. So this is essentially the set of rules by which RICS regulated firms must work. And it includes things that you wouldn't, I suppose, they're not unexpected. Professional judgment overrules everything. So, if you're producing work product, client advice, whatever, that has to be reviewed by a professionally qualified surveyor, and they have to, they take ownership for that thing. We have to be really clear with our clients about when AI is being used and when it's not. And we have to give them the option to opt out. We have to review and assess and then regularly reassess any AI capabilities that we're thinking about as a business. And that is everything from, how do I trust this model? It's not just a black box. What's the reliability? How is my data quality affected? Are these models learning from the ingestion of our data when we're sending these prompts? All of this sort of stuff. So that's coming to a real head. So as a business, and I think you're right, the shadow AI, because the AI hyperbole, which is it will save you time, it will be better, it will be more creative, is obviously really, really a positive draw for partners and staff, because it can really give you, super efficiency gains. But you have to do that with a bit of professional skepticism. And so where people, may use a personal device to send a prompt that they then type into their work device, all we can do is provide some kind of guide rails and ensure that we have appropriate controls, in our IT and systems to recognize where those sorts of things are being done, and where they're not. We currently, we have a couple of paid for AI capabilities that we use, that have integrated really, really well. They've fairly limited use cases, but what they have done is, bring huge efficiency gains in a couple of areas of the business. And then likewise, the Microsoft sort of suite of tools and Copilot, we're starting to think about how do we use that? How do we bring real efficiency gains? But it all comes back to data quality. If you don't have the underlying data that these models can learn from, that is of really good quality, then it's learning the wrong lessons and it's giving you the wrong outputs. So it's a real balancing act. And I think that thinking about that safely is sort of the big thing, and how we capitalize on the potential, from an innovation perspective, but at the same time, it directly supports our business strategy with those things that really matter, and where they're going to maximize the benefit, but we can do so in a compliant way and also retain that professional judgment and oversight.
Well, I think it's so interesting. I was at a networking event yesterday, and it was an MSP that were running it, and they had people from PAX 8 and representing Microsoft there talking about
Yeah.
Copilot, and it was on the topic of cybersecurity and agentic AI specifically for SMEs. And I think the biggest thing I kind of took away from it is that strategy piece is so important. I think there are so many kind of use cases where AI can be great, but if people are kind of pulling it in, they're trying free versions. Many of the free versions might be used to kind of train these models, and people are using it for all these different kind of fringe or edge use cases. There's not really a consistent approach or strategy, and having that strategy, it's then much easier to understand, actually, is this helping us get to this overall goal, or is it pulling us away? And quite often people don't, it sounds a bit wishy-washy having a strategy, and it's like, it's not just to go faster, to grow faster, get more clients, whatever. It's actually having a good guiding principle by which all of these kind of AI innovations will be sort of judged against. And plenty of businesses that were there yesterday saying, oh, we're dabbling with this, we're dabbling with that. I was like, okay, cool, you're dabbling, it's making you dabble quicker, but at the end of the day, the risk that it's exposing you to is not worth it. And also AI can be then incredibly costly if you're just back and forth having a little chat with it, right?
I think you're right. It's there's a lot of AI out there. There's a lot that isn't really kind of mature in the market. It's very emergent. It got some interesting use cases, and on paper looks like the benefits are good, but because it hasn't had kind of long-term testing, long-term time to embed, develop, iterate, and kind of improve, we don't really know. So I maybe I'm a bit of a skeptic, but it's like all of these things. I think if you really have to be willing to give something a pilot, and then also be willing to stop, not continue down the gambler's fallacy. Well, I've invested this money in it, therefore I should continue to develop a bad thing. And I say a bad thing as in it might not be the right tool or capability, rather than it's bad. Because I think everyone understands that the fundamental, harms that can come from AI are absolutely monumental. If bias is wrong, if we start excluding particular, segments of communities from particular markets and this kind of thing, then, that's incredibly damaging. And what we're not doing is we're not being fully representative of the markets that we serve, and, the whole sort of consumer angle. And if we were regulated by the FCA, for example, thinking about consumer duty, that brings a whole other kind of element to it. The RICS demands that we as a regulated firm act in the public interest, which from their kind of conduct rules is a very similar sort of set of principles, which is, we're doing the right thing by our clients and customers. We're not exploiting people and situations. We're actually providing, meaningful advice that is worthwhile to them. And so I think augmenting the professional judgment oversight with AI tools is helpful, might make you a bit more creative, might help you think about something from a different angle, but you still have to retain that professional judgment and oversight.
And I guess that was going to be one of the questions I asked, but you kind of explored it pretty well there, that's another kind of balancing act you've got in your role of, yes, other people in the business can kind of dabble with these things, but you maintaining the short-term benefits of this AI adoption and aligning it with the long-term kind of strategy and long-term trajectory of the business, whilst also, we spoke about before, that kind of horizon scanning of understanding what's the regulation currently that we need to kind of comply with, but also what's coming up further down the line. And as we grow and as we evolve and maybe enter new markets, or maybe new regulations are coming up, how is this going to make our lives easier or harder? So I guess on that, following on from that, keen to sort of understand how you're noticing that kind of regulatory change happening and how you're maintaining this horizon scanning whilst also being able to kind of act on the pressing problems of today.
Yeah. So I just I think that what we've got is a very fragmented global picture, and the UK, from the perspective of being outside of Europe, being a sovereign currency, we manage our own affairs from a regulatory and kind of legal perspective on statute book. I think as we see markets shifting and changing, as a nation, we want to be more competitive. And you might recall, I think the government last year sort of said we want to cut red tape, have less regulation, and enable growth. But at the same time, there's the sort of philosophical point, which is, well, we don't want to undo years and years of controlling the types of individual or money or assets that come into this market. And so I think there's a philosophical point there. Okay, so where do we want to be? And depending which way you look at it, there will be a loosening or a tightening of those rules as you go along. And as a regulated firm, trying to keep up with that is an absolute nightmare, frankly, because there's always something new that is coming along. Depending upon who you listen to will depend upon the slight colour that comes with that new piece of regulation, whether it's more restrictive, whether it's opening up something, and the interpretations from actually your own supervisors can also suddenly create a little bit of tension. So the HMRC will take a view on the money laundering regulations that might be a slightly different interpretation to the RICS, because the RICS is looking much more from a kind of real estate angle, and HMRC is sort of looking at regulated firms more generally with that real estate, a sort of estate agency business and letting agency business angle as well. So it all comes with a slightly different flavour. Being able to translate that into something that partners and staff understand, and putting in those controls that firstly mean that we're meeting our core obligations, is key. But then for those things that are more based around risk appetite, so we as a firm set our appetite for the types of clients we work with, the types of activity we'll do, the types of geographies that we're happy to transact with, means that we have to think not just from a regulatory perspective but also from a commercial perspective, because you can quickly put yourself at a commercial disadvantage and therefore become uncompetitive if you decide to blacklist a particular particular market or a particular client or a particular product type, because you're taking a very conservative approach. So getting that balance right and understanding the regulation that's coming is really, really can be quite tricky, but also understanding the regulation that's coming and being able to respond to that in good time so you're ready is equally as hard. So changing internal systems and controls, changing behaviours can take a very, very long time. Sometimes you get a piece of regulation or a change that's dropped in quite quickly, and you have to respond fairly swiftly. And at the same time, we're trying to balance this with run the business and change the business. And in a small business that we're tech enabled rather than sort of tech driven, making those technology investments and changes is always a commercial decision. And at the heart of this, it's about our clients. We've got to make sure that we give great client service and great products and opportunities to our clients, and we're sort of best in class in each of those sectors within the market that we operate. It's a huge balancing act, and coming back, I think, to probably the beginning of the conversation, risk and compliance is a cost center. We don't fee generate. We burn, we burn cash. And so I'm always trying to balance the commercial aspects alongside those risk aspects. And it comes back to explaining that why in a way that is meaningful to the partners that ultimately, pay for the business.
What do you think needs to happen? I guess it's a bit of a philosophical question for us to hopefully help people realize the commercial value in the risk, compliance, and sort of security functions in businesses.
Yeah. I think first thing is there's a definite ROI. So we as a business are on a number of panels with, regulated firms, banks, lenders, and we go through their supplier due diligence and, their supplier questionnaires, and they are really, really detailed, as you'd expect in an FCA regulated business. A lot of the things that they ask would never apply to a UK based real estate business, right? But we still have to demonstrate that we thought about these things, because if we don't, then we're kicked off the panel. And that panel and, the volume of value that comes through that is a thing. So you can say, if we don't have this, if we don't have cyber essentials, or if we're not ISO 27001, then you're off the panel and you don't get any work from that panel. And that is pretty much the same as, all regulated panel agreements. There's a minimum standard that's expected. So I think there's a tangible part there. The bit that keeps me up at night is more where, a business might decide for a commercial reason not to do something, because you don't have to by the letter of the law or the regulation, but it leaves you wide open from a reputational standpoint. Or you get a regulatory inspection and you're found wanting. So you may not be found to be, technically non-compliant, but there may be aspects of your controls or your ways of working that are outside of the regulatory expectations, and then you get a letter of censure, or you might get a fine, and suddenly your brand is in the market as failing its latest inspection for X. So the reputational risk is huge. It's really interesting, right? Because, businesses are in business for a reason, that they want to be profitable and, make returns for shareholders or owners or whatever that might be. So balancing the cost of doing something with the benefit of doing that, and there's always a do nothing option, and banking the saving, that sort of triumvirate of decision making can, and depending what markets you're doing as well, right? So markets aren't always flat level or always growing. Sometimes they take dips, and sometimes you might be in a trough. So you might not have the capital to spend on something that you really need to, but at that particular point in time, you can't justify it either from a commercial perspective or from a risk management perspective. But if you think, okay, so where does this leave me in 5 years' time or 10 years' time? Then that's where the problems come. And I think that we've seen across so many, different sectors, the size and scale of fines for historic failures. And it's not just the fine that occurs at the time; it's then the remediation exercises that follow up with that. They are usually more intrusive, more impacting, and more expensive than the fines that you receive in the first place. So the making right and dealing with the mess of yesterday. Sometimes you're better to start thinking about, right, I don't want to create the mess of yesterday that I have to deal with in the future. So, let's get this right now. But there's always the commercial lens, which, is always attention.
Yeah, I guess always being kind of proactive is going to be more cost effective than being reactive, but being able to kind of frame. And I think that's the thing with cybersecurity, in contradiction to a lot of other kind of areas of businesses, you're judged on what's not happened. So sometimes bringing those real risks to light and saying, although this hasn't happened, there's a high likelihood, especially as we're, broadening our attack surface because of X, Y, Z, it's highly likely that this event that's never happened in our history is now going to happen. And I think that's a really difficult conversation to have. Have you?
Yeah, and just on cyber, because that is so dynamic, as quickly as our vendors that provide us with those security tools put in controls and put in additional code, and that's only happening because those new threats are being identified. So we're always a step behind. And
Yeah.
what we're doing, the advent of AI as well, is, creating really clever code, and most of the models shouldn't allow you to create, code that is damaging, but the tools are there. So you've got this continuous cat and mouse game. Um, but being able to explain that back to your board, and we do regularly, we say we've had so many malicious emails stopped. We've trapped, so many phishing attempts. There are actual numbers to these things, and it's not just tens, it's like hundreds and thousands, and it's continuous and it's continuous. And for us as a business, because we have large transactional things that might take a month, might take a year. And then we have, our auction cycles, which are much more focused and moment in time, but really, really important for our brand and for our clients. So the vendors, but also, the bidders and buyers that we're bringing in there in huge numbers. If we had a devastating cyber attack and we weren't resilient during an auction window, that, is fundamentally quite damaging, not just financially, but also, to the brand. So we have to think really carefully about how we invest in the controls and the scalability, because it's not just about one business line. It's about, all 12 business lines, all doing very different things with very different types of clients and customer. But we need to sort of accommodate for all of those, which, as you can imagine, is quite testing.
Yeah, absolutely. And following on from that thread then, looking ahead, we talked about AI and this rapid AI adoption. We're looking at all these kind of new threats and new attack vectors that are coming out. What, I guess, kind of concerns you most? You talked about what kind of keeps you up at night, but is there anything in particular that kind of concerns you as a business across the 12 different business units?
Yeah. So I think my fundamental concern is that we miss out on an opportunity because we're too conservative. So that's probably contrary to the answer that you were expecting.
Absolutely.
Um, I think that there is so much opportunity and potential. And I went to a conference a few weeks ago, and I think they said it won't be the AI that takes your jobs. It will be the people that use the AI better than you that take your jobs. So it ever was, right? If your competitors are being more effective in whatever way, then they will take market share, and ultimately, that sort of, you'll see that diminishing return. So I think it's really understanding, okay, what's important right now. What are the best things for this business at this point in time in the future? And how do we safely get there? And then the second order is all the stuff that you were probably thinking about, which is, rapid adoption of AI generated synthetic fraud, rapid expansion of malicious code, rapid expansion of all of these things that AI is really good at, about creating efficiency and volume quite quickly and making it more realistic and less susceptible to being caught by tools and trackers, because they're always one step ahead of the curve. So I think that, is a sort of an operational aspect, but actually I'm really interested in how we capitalize on the benefits that come.
So once again, almost like kind of tying that back to and shifting the paradigm from risk and compliance being the cost center of the business to actually something that can really drive
Yeah.
meaningful,
Yeah. Really add value.
commercial value. Yeah,
Yeah.
yeah. And be that kind of the business unit of proactivity rather than sort of reactivity, because that's more cost effective and it sort of enables those deals rather than, blocking them last minute because we've not got this or not got that.
Yeah. No, exactly that. And you may have to, make some sort of short-term investment, but
Mm.
ultimately, if the business case stacks up and you can see how that supports a particular business strategy into the future, then there's no reason that you shouldn't be investing to enable that growth.
And I guess as we sort of wrap up, are there any sort of particular investment you're looking to make from a compliance and risk side of things? I know you said that if anything, you're worried that the business is maybe too conservative at times and missing out on deals, but is there any sort of standard framework that you're looking to kind of adhere to as you go forward, thinking this is going to, from a strategic perspective, unlock a lot of opportunity for us where our kind of competitors aren't already thinking about this?
Yeah. So I think The first side is really bringing those efficiency gains. We do a lot of high volume, repetitive work. And I won't call it low value because it's inherently important, but we spend a lot of time looking at things that are absolutely fine because we have to look at them and work out that they're fine, and that's okay. So I suppose it's a little bit of looking at how we can create efficiency in those sort of internal business processes where actually we get confidence that our systems are bubbling up the things that really matter. So, like the dynamic risk assessment, uh, not so much rules based in an old, if I think back to kind of transaction monitoring where you build a set of rules. You'd say, right, this type of person usually transacts in this sort of way, usually in this market, and then suddenly something's changed from that norm, and so they pop up because you spend an awful lot of time dealing with false positives. So getting the tuning right is really important. But I think also being able to think about how AI can help you to really do that by bringing together all those different pieces of information and strands and creating a really strong signal that you can rely on, but also you can demonstrate how it works to your regulator. To be able to, the explainability is really important. And then the second part is really making the client journey as simple and as frictionless as you can. We run a sort of very much a face-to-face business. It's all about people. So there's lots of client contact, particularly outside of the sort of auctions world. And then in the auctions world, we've kind of got a hybrid model where we take the time to onboard every bidder and buyer in every auction. Every bidder and buyer is not successful in every auction. So, we're doing a lot of work to ensure that we can offer an unconditional contract. So that for our vendors, that's really, really good because as soon as the hammer falls, the buyer is on the hook. And we've done all of the KYC, we understand our client, we've approved them, we know where the funding's coming from and that sort of stuff. But that is quite high touch activity to do. And as you can imagine, auction windows are relatively small. We only have a limited time to market properties. So, we have this compression. And that's where we need to think about how we deliver the best value from an efficiency perspective, but also making sure it's equally or more effective to do that process. So I think that, those two parts for me.
We've covered a lot of ground on this podcast
Yeah.
from talking about, really kind of empowering the employees, building that kind of culture and hopefully mitigating some of those insider threat risks and in creating a culture of compliance. We spoke about, delighting your customers, and that's been a common thread, throughout this of, we need to act in the customer's best interest. We've spoken about, the opportunities and the risks with AI, the pros and cons of acting in very regulated environment that is the UK and the comparison with maybe more lax international. We didn't touch a great deal actually on the international side of things, but we covered so much ground. So I guess to conclude, people that are finding themselves that are in similar sort of roles to yourself that are really understandably drowning, struggling to, maintain that strategic vision as well as the day-to-day operations, maybe feeling like they're firefighting at the cost of not setting that vision. What would your main advice be to those people?
Yeah. That's a really good question. I probably haven't worked it out myself. And I find myself going from, the strategic to the tactical very quickly, depending upon what has happened that day. This is probably more personal to me, but I think it's about maintaining perspective. So understanding what's really important. Everything is not urgent and important. Lots of things are urgent. Yeah. Lots of things are important, but there's only a certain number of things that pop up into that top right quadrant of really urgent, really important, must deal with right now. Because if you treat everything as urgent and important, you never actually get to the root cause of the thing. And so all you're doing is treating the symptoms and not dealing with, the causation. So I think that would be my first bit of advice. And then the second one is really understand your business. So get under the bonnet of what business does, why it does it, and who it does it with, because that will really help inform, from a risk and compliance perspective, your risk appetite. And ultimately, that is your real way of managing risk in your business. There are those non-discretionary things that you have to do. The law says thou shall, or your regulator or supervisory body says you must. You've got to do those things, but make them as painless as you can for your clients, particularly, but also for, front office, middle office, and the operations teams that are doing a lot of the legwork. I think that would be where I'd focus the effort.